Time now for some business news, and let's cross straight to Dubai to speak with Jameel Ahmad, Chief Analyst at GTC Group. Hi, Jameel. Good to have you with us again. Asian markets broadly up this Tuesday. What are you seeing?
I see a lot of sunshine, and in fact, that old metaphor that you sell in May, go away, that doesn't seem to be the case as we're coming into more than the first trading week of the month so far. What's really helped sentiment again, Hex, is the beat of that music that started from Friday afternoon, that the US monthly employment report came out with somewhat of a miss. That's really revived hopes the United States economy will be seeing lower interest rate policy late into 2024, which is the same kind of beat that we're hearing from the European Central Bank with the EU. We're going to hear from the Bank of England on Thursday, where they're expected to give some sort of guidance on the potential timeframe for where the UK economy might be hitting lower interest rates. And that seems to be what's driving financial market sentiment overall. And also what's helping is that corporate earnings season in the United States continues to impress. And it does appear that investors are waiting for lower borrowing costs, which basically means lower interest rates. And until then, they're quite happy to sit on the global stock market positions.
Meanwhile, Jameel, the Japanese yen continuing to show a fair bit of volatility.
It's the jack-in-the-box trade, and you don't know when it's going to punch you either. If you look at some of the volatility that you've seen in the Japanese yen over the past 1 week or so, it's been absolutely spectacular. We've gone from 160 as of last Monday all the way towards 151 on Friday, and now as we're having this interview, we're punching towards 155. To give some perspective, just imagine if you're going on holiday or you're buying a product or you're doing business with Japan. That's a big impact on what your potential revenues are or what your cost base are. And again, we could say the same thing hypothetically if you're a visitor or a viewer right now from Europe. If you're seeing the euro was trading at 110, all of a sudden it goes 1.00 and then 105. That's a lot of uncertainty, and that's the kind of volatility that really you shouldn't be seeing with one of the largest economies in the world, one of the most important currencies in the world, and one of the most important financial markets. And also what's now not helping is, as of now, we still have no word or confirmation on whether the Bank of Japan intervened in financial markets last week, and that's why we're seeing this volatility. But until then, it pretty much is keep your seatbelts on, because we can expect anything with the Japanese currency until we have some guidance.
Well, Jameel, we're also expecting some news on corporate earnings. What are you looking out for there?
Yeah, so far, Hexie, we've actually had as many as 400 of the 500 companies on the S&P 500 index that have reported their earnings, and most of them, above 50%, we're coming towards above 60% as well, have reported positive revenue surprise, which again shows that corporate giants and those companies on Wall Street are handling the higher borrowing costs. But this week, we still have Walt Disney, we have BP, we also have Uber, and we have Airbnb. So although most of the companies have already announced their earnings, we still have a couple more left. But so far, it does seem to be so far so good when it comes to company updates, and that there is more room for optimism when it comes to global financial markets, as long as investors still get those cues and guidance that lower interest rates will support the market sentiment also.
Jameel Ahmad, thank you.